Now with the latest business and market news, it's over to Jayne Edwards.
Thanks, Alan. There were more signs of strength in the US share market on Friday, with the indices continuing to gain ahead of a three-day weekend in the States. The Dow jumped by 0.5% thanks to strong sales from the major blue chip Caterpillar. The S&P 500 has doubled its value in less than 2 years, but many Wall Street analysts are now expecting a correction. China unsettled commodities markets on Friday by lifting its bank's reserve requirements in a further attempt to keep a check on growth and inflation. Over the week, world stock markets were generally higher and Australian shares added 1%. Late on Friday, Fortescue Metals had a loss in the federal court over allegedly misleading statements made by the company and founder Andrew Forrest about a 2004 Chinese iron ore deal. The court upheld ASIC's appeal in the case, meaning that Fortescue faces a hefty legal bill and Andrew Forrest could be banned from acting as a company director. However, Fortescue is flagging a further appeal, telling the stock exchange it's considering all available legal options. Now, with all the news on major share price movements over the week, here's Tom Elliott.
Well, as you just heard, the Australian share market had another solid week. Now, because we're in the middle of results season, it is company profits that are driving share market prices far more than developments overseas. First up, Telstra. Stock was up 5 cents during the week. Of course, the stock will go ex a dividend of 14 cents a share on Monday, and it does have a history of going up in the few days before this. That's been established well in the past. Still, investors like the company's newfound focus on wireless broadband. Turning to mining, and BHP, of course, announced a record first-half profit of $10.5 billion. However, the stock didn't do much, as the company said it was going to retain cash on its balance sheet to fund organic expansion. Its competitor, Fortescue, had a very good result and also announced a maiden dividend. Now, before you get too excited, the dividend is just 3 cents a share unfranked, which equates to a yield of just under 0.5% per annum. Qantas's profit was up quite dramatically for the last 6 months. However, that company will not reintroduce a dividend, possibly because it's worried about the impost of higher fuel prices in the near future. The ASX profit was up just slightly for the year, not a particularly good result, but of course its share price has been buoyed by all this talk of mergers and takeovers between various overseas exchanges. Early in the week, National Australia Bank shocked the market, both the share market and consumers, by issuing its now famous Dear John letter in all the major newspapers. Its share price was up for the week, as was Westpac's, although the other two major banks, ANZ, Commonwealth, were down. It seems that competition is suddenly firing up in the banking marketplace. That can't be a bad thing for consumers. And finally, Foster's first half profit pretty disappointing in both the wine and beer divisions, but of course takeover, demerger talk is keeping the company's share price fairly buoyant. Winner of the week is Ardent Leisure Group, up 22% after reporting a massive 130% increase in first half profits. Loser of the week, however, is Biota Holdings, down 22% after reporting an unexpected first half loss of $16 million.